Okay, it's Monday, September 21st, 2020, and this is your weekly look at the latest Altos Research data that came in over the weekend for the entire US real estate market. The macro data, the important trends of the 2020 real estate market they're intact this week. Prices remain elevated on super tight supply. The unstoppable consumer demand for homes continues. Next week, you'll see some headline numbers like the Case Shiller Index for August, which will obviously show strong home price gains. Of course, we'll be looking at October already, and none of the leading indicators are backing off at all. October is the 6-month anniversary of the mortgage forbearance program. So 6 million or so borrowers have been in this program. The participation rate is actually declining as people start paying their mortgages again. So that's actually good news. There are 1 million or so homeowners behind on mortgages, but not in forbearance. Foreclosures have been shut off, so these will start having to be worked out after the first of the year. But what's interesting is because there's only about 1.5 million mortgages in the country with negative equity. Everybody else has got equity. And this negative equity number keeps dropping every day as our home values rise like crazy this year. So the total number of potentially distressed sellers in, for example, Q1 and Q2 next year actually looks pretty limited. So we continue to say that we're unlikely to see any big changes in inventory in October. So October is the 6-month anniversary. And so the forbearance program needs to get renewed in October, but unlikely to see any real uptick in inventory in October. Maybe a slight uptick after January 1 when foreclosures can start. And then again, really the window is April of 2021. Home prices this week are steady at $350,000 for a single family home, median home price for single family homes in the US. We're now obviously past the summer buying season peak. Normally this peak happens at like June 30. This year though, the market peaked almost 2 full months later, really the 3rd week of August, between August 21st and 28th this year. There are some markets like the ones we've called the Zoom towns or the co-primary home markets. These are the ones that are getting the boost of buyers who can now work remotely. There's a lot of these markets that are still climbing in price way later in the year than they normally would. For example, the California mountain towns usually peak in pricing in April of the year. But this year, the demand versus supply equation is so far out of whack that prices are still climbing all the way this late in the summer into autumn. Active inventory fell this week by 1%, down to 573,000 single-family homes on the market. So this is 41% fewer than September of 2019. And, it's really, you can see by the red line on this chart that we're aiming for under 500,000 homes for sale when we start the year in January this year. So no changes in the trend there. It's just, our shocking situation that we remain in. On the new listings volume, so these are the new properties coming to market each week. We're at 73,000 new listings this week. New properties getting listed. That's sort of right where we've been in September of each year of the last few years. So what's interesting here is that strong demand is actually pulling more homes to market to see if they can fetch the big prices right now. And so that's actually buoying the amount of new listings that are coming. I guess in that sense, the market's working to keep the new listings volume in a reasonably healthy place. We looked into the fires in the Western U.S., and it have probably been keeping a lid on some of these new listing volumes, but not really in a way that's like accelerated our inventory crisis for the whole country by a notable amount. For example, there are 20% fewer homes listed in Oregon this week than last, but that's only a couple hundred homes, so 1,000 to 800, maybe down from 1,200 in late July a week. And so that's not enough to move the national numbers. So the fires aren't really enough to move the national numbers week to week. More importantly, perhaps, is the new listing or the increase of prices. So homes is the percentage of homes on the market which have increased their asking price in the last few months. Those are flips, or those are strategic marketing changes. Those are trying to capture the increased demand as the summer goes on. And as we've noted in previous weeks, this price increase number is one of the ways that you know that home shoppers are still out there in droves, right? There's bidding wars, there's competitive offers, and this is common like across the country, across price points right now, this late in the year. So even if, for example, the market pulled way back in December of this year, you won't see the headlines, the traditional home sales headlines of that won't show up until February. So what this means, what this price increase number means, is that you can bank on strong, like bullish home price headlines until all the way through the end of the year. Homes are on the market now. There's bidding wars. There's competition. There's not that much supply. There's mortgage rates are super low, and so the ones that get offers now and they close in October or November, those get recorded in December. So like all of the signals are in the market now are going to keep us bullish through the end of the year. Of course, keep your eye on the Altos data if you want to see, for example, if and when demand changes finally arrive. You'll see it in this data first. So that's the data for this week. As always, visit altosresearch.com for the full details and the latest data. Subscribe to the YouTube channel, hit the little subscribe button to make sure you get these videos and others each week. Please post questions or contact us directly if you have a view on the market you'd like us to explore, or contact me on Twitter. It's a good place to do that too. And thank you, as always. More next week.